Hey guys, this is Mubashir and today we are going to analyze the weekly market snapshot for this week. Obviously, we are going to cover the areas like what's happening in the domestic market, that is in India, what's happening in the global market. Obviously, for the global market, we check the US data for and also we are going to cover the what's happening in the crypto market, right? So let's start the video with the domestic one. So let's check the Nifty 50 first, or we can check the Sensex. So I always go with the Nifty 50. So last week we had saw the Nifty 50 was touching its all-time high, right? That is 26 and 200 around. Okay, here it is. 1 month chart. Sure. Look at this. Uh, Now it is on all-time high. People are concerned that why Nifty 50, Sensex, all are making their all-time high. I even thought the market is continuously going down. I mean, if you check the mid cap, small caps, micro caps, let's put aside the micro caps. You check them, they or you come to know that all the stocks are going down, but still Nifty 50, Sensex are going upward direction. Okay, that's the major concern which is going around. Anyways, okay, it's quite concerning. Okay. On Monday, the Sensex and Nifty 50 slip. Sensex down 330 or 331 points, and Nifty below 26. As you can see, it was recently down from 26 level, and Nifty below around 2600, largely because reality chemicals give up gains, will IT and banks try to hold up. I mean, majorly the banks are holding here. Rupee, the main reason here is that rupee depreciation. Look at this, rupee against USD. Check it this. It will be more easier for you if you check with the USD against the rupee. It is around 89.35. Look at this. It is also making it is all-time high. That means the importers are facing too much trouble because of all this. I mean, exporters are gaining the advantage of the depreciation of the rupee, but weakening rupee creates the major concern. I mean, right, in the forest reserves and all, because recently the in order to stabilize the rupee, RBI has sold too many of their USD, right? So the Indian rupee remains under pressure. Thought it closes nearly 89.35. Recently, month and dollar demands and global uncertainty keep volatile alive, right? External factors like global risks of trade, uncertainty outflows create a headwind for import heavy sectors and keep pressure on cost for raw materials dependent firms, right? And if we go with the macro signals and outlook, the Reserve Bank of India, in its latest bulletin, warned about the heightened exuberance globally, but remained optimistic about India's investment potential given fiscal plus monetary alignment. Right, on corporate and stock selection side, some brokerages remain selective. Recent notes suggest picking quality names like Adani Ports and says for the medium term value. For this, we can watch domestic demand plays, exporters, importers, sensitive firms. Rupee forex risk, as I told you, the rupee is continuously depreciation. It is creating the risk in the forex reserves and liquidity flows if global conditions shift. Right. So let's go with the global one. That is, for this we can check S&P 500, or we can see the Dow Jones, Nasdaq. Most of the time check the for this. Look at this. Okay. Initially it was going down here. You can see it was because of all the uncertainty which was going around. and now again you can see it has broken. It is like support here was here, and you can see at this level, this level. Okay. Now again it has broken, and it is now again going bullish, right? If we globally equities rally on rate cuts hope, but under current of caution remain, right? As US yield and rate cuts expectation firmed up, Asian and global equities saw a fresh leg up. This lifted sentiment for the EMs, sorry. So still tech and AI heavy names remain under pressure globally because valuation seems stretched and the investors are getting selective. I mean, the value versus hype debate continues. Global risks and macro data remain key triggers. I mean, with macro data still rolling in, global growth, inflation, geopolitics, markets are jittery. Every new headlines, positive or negative, is causing swings. This makes global context especially relevant when looking at the sports, currency, and flow dynamics. If we say in the bottom line, the optimism has to easing rate expectation, but underlying fragility plus valuation risks keep sentiment cautious. EMs plus commodities remain sensitive to the global tide. Now let's go with the global one, that is Bitcoin. We know that last week Bitcoin was down by around 35%, 30 to 35%, but it is not concerning as much. I mean, if it happens with any stocks, it is concerning. But we know that Bitcoin do this very, uh, we can say it is normal thing for the Bitcoin, right? Now it is trading at like 91. Look at this. 91, it was down by the it was trading at 81, but now it is quite, we can say, stabilizing. That is okay. So it has taken like, we can say, a support here at this level. Okay, so Bitcoin plunged to USD, we know that 80,553, hitting a 7-month low, marking one of the worst weeks in recent memory for the crypto market. Broad based risks of selling, ETF flow reverses, and investor nervousness around global macro rate risk assets are cited as the main triggers. For investors, or we can say funds holding crypto or linked equities, drawdowns risk in high valuations may not hold unless macro stabilizes. For traders, sharp moves is equal to opportunity, but leverage derivatives exposure is extremely we can say risky now. Right? So we know that the reason behind the crash, it was about the all the FIIs. Sorry, I mean, as the crypto is a risky asset, and the US yield and the risk oh sorry, Fed rate cut expectations, because of all these things, the too much ETF outflows was the reason behind the crash. I mean, people are selling their ETFs, that leads to the extreme selling pressure on the crypto, and that leads to the wiped out of around $1.2 trillion dollar, if I am not wrong, when it was crashed by 35% approx. So overall, the market is quite, we can say, neutral, consolidating, we can say. I mean, for the Indian market, Nifty 50 making it is all-time high, Sensex making it is all-time high, but the majority of these stocks are going down. That creates the concern. But yes, GST 2.0 has created a very big, we can say, impact in the stock market because of this. I mean, because of the all this GST 2.0, the demand for the goods or the prices, because prices went down because of that, and that leads to the increase in the consumption, that leads to increase in the profit in the for the companies, that leads to the good quarterly results, right? That's the psychology anyways. And for the global one, US already remain under pressure because we know that it is implementing too much tariff. So yes, if they increase tariff, that's also going to backfire them. And If we talk about the BTC, now it started again booming. Let's see for the future. Thanks for the watching the video. Have a nice day.